October 1979 sell-off of gold of 16.5%. In October, we hit a high, October 1979, I think it was October 1st, 1979, or October 2nd, the first business day of October, basically. Gold hit what looks to be about $455 and went down to about $380 by the 1st of November. That was a monthly sell-off of about 16.5%. People thought that the gold rally was over, but no, it was not. It was only just beginning. It went from $380 to about $872 in about a month and a half, or about 2 months actually. This knocked off a lot of people. Don't let this October knock you off. We could see a sell-off if the liquidity crunch is allowed to continue for a little bit, but don't freak out about it. It has happened before. We've had bad months, even in 1979, which was the best year for gold ever. In silver, you could see what happened in the same month, October to November 1979. Silver was more static for a longer period of time. For about 2 months, it didn't move. As gold moved starting in November, silver did not. Why? We're within 2 to 3 weeks of the next repocalypse, the next crunch in the repo market. The repo market is also the SOFR market, the secured overnight financing rate market, or the secured overnight financing market. The rate is the rate. This is the market where treasuries are traded for cash. The cash comes from bank reserves, and bank reserves and the SOFR volume, the amount of money trading each night, are about to equal each other, which means that there are not enough dollars to support the repo market, and the repo market supports the basis trade, among other things, where hedge funds sell treasury futures short and buy the paper and profit off of the difference. And if all of those trades are forced to unwind at the same time, you have a liquidity crunch in stocks. And followed by that, if the repo trades are forced to close, then you have all these hedge funds which are buying treasury paper forced to sell them in order to meet their margin calls. And so you have skyrocketing interest rates and falling stock market, and the Fed is going to have to intervene. The Fed will probably intervene before any of this bad stuff happens, but it means they're going to have to start printing money again and restarting QT, which should be restarted in the next 2 to 3 weeks, and we'll go into the numbers as to why. Then we're going to talk about 1979 gold and silver, specifically the month of October regarding gold, where gold fell 16.5% from top to bottom in that month, and silver was static. It was trading in a range for October and November, which is going to be around the time when the apocalypse happens, which could cause a little bit of a liquidity crunch both in gold and silver, but this is completely normal. Gold and silver went down even right before the 1980 spike, and something surprising happened in the main gold mining stock, Homestake Mining, at that time. And finally, we're going to go into something I almost never talk about on these reports, and that is another end game sign that we are approaching the final play, or the final scene of this end game play. And the sign is, when evil reveals itself out in the open, we know that the end game is almost here.
September 2019 is a stark reminder of how fast stability can erode. A sudden cash vacuum amid corporate tax deadlines and heavy treasury issuance triggered repo rates to spike from about 2% to as high as 10%. The Federal Reserve responded forcefully, injecting tens of billions in liquidity through daily repo operations, effectively halting the panic. This episode underscores that when reserves dwindle, even routine fiscal and debt operations can precipitate systemic stress.
So this is a chart of the bank reserve change week by week. The change in bank reserves, these are the dollars that fund the repo market. So I've highlighted the last four third weeks of September following September 15th. September 15th, 2019, actually September 17th, 2019 was the previous repocalypse, when the repo market froze up and QT had to be reversed for QE. Once again, that was 6 years ago, September 17th, 2019. Now these are the 4 Septembers: September 22nd, September 21st, September 20, September 18th in 2021 to 2024 respectively. It shows you the weekly fall in bank reserves at this time. The reason that bank reserves fall during the third week of September after September 15th is that September 15th is a corporate tax day, so the Treasury vacuums a lot of money out of the banking system into its own pocket, into its own bank account at the Fed, which is not part of the banking system. Also, you have auctions, Treasury auctions clearing on September 15th or 16th or one of those days, and that also vacuums money out of the banking system and into the Treasury. So these past 4 years, we've had September 22nd, 2021, a fall of 106 billion, and then the next year a fall of 155 billion, and then 166 billion in 2023, and finally 142 billion or 143 billion on September 18th, 2024. The average of all these numbers is $142.692 billion. And now you'll see the importance of these numbers in a second, but I'll just tell you that bank reserves are now at about 3.15 trillion or something like that. So if you take it down an average 142 billion, you take it down to about $3 trillion. Why is that important? Because this is what causes repocalypse. The blue line is the amount of reserves in the system. The red line is the volume of secured overnight financing of repo trades that happen every night.
Today, the Federal Reserve faces a more delicate balancing act. Its balance sheet has already been trimmed from pandemic highs, nearly $9 trillion, down to around $6.7 trillion, and reverse repo usage has shrunk to near zero, levels unseen since the spring of 2021. The new standing repo facility exists to provide contingency liquidity, particularly around tax or quarter-end crunches. But its effectiveness under severe stress remains untested. As banks tap this facility, markets will watch to see if it can absorb shocks without derailing monetary control.
If this blue line and this red line meet, you get a repocalypse, or if they get close enough, really, because they're not going to meet exactly. But this was the last repocalypse over here, and you can see reserves started to rise over here because they restarted QE after ending QT when repo rates went to 10% over here, when the red line got really close to the blue line. So you can see that is happening again. The last repo volume that we saw was 2.947 trillion, and reserves are now just below 3.2 trillion. So if we take away, what was this average number? It was $143 billion. So if we take $143 billion away from 3.2 or 3.15 trillion it is now, then we're going to hit $3 trillion. While this number keeps rising, they're going to get close enough that they're probably going to cause some kind of repo crunch. And then the question is, what happens then? I don't think it's going to lead to an immediate crash of everything because the Fed is going to step in almost immediately and alleviate it, but it means that the money printing presses are going to restart, and gold and silver are probably going to respond pretty well after maybe a brief sell-off once the repocalypse hits. Here is the ratio chart that I show often. This is the ratio of reserves to repos every night. September 6, 2019, they were at 84.6%. We are now at 88.8%, above the previous repocalypse level, so it should happen at any time now. Now, if it happens in September, which I think is likely, though of course it's not 100%, and I could be totally wrong about everything I'm saying now, because this is really new territory for everybody. The monetary system never really dealt with this before, so everyone's just kind of making it up on the fly, including me.
Central to financial plumbing are basis trades, where hedge funds short Treasury futures and purchase actual bonds, profiting from yield differences. These operations rely heavily on repo funding. But in stressed conditions, such strategies become vulnerabilities. If funding vanishes, forced unwinds can ripple rapidly across markets. With regulators in the U.S. and the Bank of England clamping down, citing leverage, fragility, and systemic threat, these trades are now under scrutiny. A repo crunch could thus ignite broader market volatility beyond the bond market.
You have here the October 1979 sell-off of gold of 16.5%. In October, we hit a high, October 1979, I think it was October 1st, 1979, or October 2nd, the first business day of October, basically. Gold hit what looks to be about $455 and went down to about $380 by the 1st of November. That was a monthly sell-off of about 16.5%. People thought that the gold rally was over, but no, it was not. It was only just beginning. It went from $380 to about $872 in about a month and a half, or about 2 months actually. This knocked off a lot of people. Don't let this October knock you off. We could see a sell-off if the liquidity crunch is allowed to continue for a little bit, but don't freak out about it. It has happened before. We've had bad months, even in 1979, which was the best year for gold ever. In silver, you could see what happened in the same month, October to November 1979. Silver was more static for a longer period of time. For about 2 months, it didn't move. As gold moved starting in November, silver did not. For 2 months, it traded within about $18.50 to $16, $2.50 in that range, and then from there, it went from about $18.50 to $50 in about a month and a half to 2 months, or whatever that is. So don't be afraid of static silver or a sell-off in gold in October following a repocalypse. I'm not saying it's going to happen, but if it happens, it's completely normal.
Historically, gold and silver react in surprising ways to market shocks. October 1979 saw gold plunge 16.5% before embarking on a historic rally into 1980, while silver remained flat through November. That lull provided an entry point before explosive gains. This pattern suggests that if liquidity stress triggers a temporary sell-off, bullion markets may rebound strongly. Moreover, gold mining equities like Homestake in 1980 sometimes surge only months after precious metals peak, offering a hedge for patient investors. The message: short-term volatility isn't a warning to flee, but sometimes the calm before the storm.
And here is the surprising chart. This is 1980. Remember, the gold peak is over here at the beginning of the chart. January 1980, about January 21st, 1980, it's about over here, maybe over here. Exactly where it is, I don't know, because I don't want to count these candles, but you can see the main rally, the big rally in Homestake mining, the premier gold stock back at that time, happened starting in May of 1980 and moved from about $7 to $22, about tripled during 1980 after the gold peak had already happened. So there's another incentive to get some gold mining stocks, because you don't know when exactly they're going to rally. They don't necessarily trade in line with gold and silver all the time. So it is one way to gain exposure to rising bullion prices. And the final thing I want to talk about, as to a very obvious sign that the end game is almost here, is that the other side is getting unmasked.
You one ugly motherfucker.
This is Dmitry Daskalakis. He is the guy from the CDC that resigned in protest of RFK firing the head of the CDC. This guy says that he is standing up for the rights of children, but you can see here, these are his public pictures on Instagram and other venues that you can find very easily online. This is what he is showing to the world on his the right side of his chest, or the left if you're looking at him, which you are. This is, over here, is a pentagram. It's the sign of devil worship, and he wants to make that known to everybody. This guy is probably not so interested in protecting children.
I will not put up with tomfoolery in my classroom, children. Mr. Slade, put this rubber ball in your mouth.
This guy is in charge of vaccine policy for the CDC, or he was until he resigned.
Amid economic dislocation, societal tensions often surface. While I'd advise caution about sensationalist claims, there's a broader narrative. In upheaval, hidden agendas and institutional flaws often emerge into the light, serving as a societal signal that a system's moral and structural foundations are breaking down. As monetary crisis erodes old structures, the emergence of previously unseen power dynamics can hasten rebuilding. Rather than fight the descent, the wiser move may be to let the old system dissolve under scrutiny, then contribute to crafting a more resilient, equitable future.
I am, one of the COVID experts, one of the vaccine experts, and at a senior leader meeting at CDC, the movement that Secretary Kennedy thinks that he's launched is really that only the strong survive. He was talking about his desire to have avian flu burn through chickens, and the chickens that survive, they're the ones that should be bred because those chickens have the superior genetics. I feel like what he said about chickens is what he believes about people, and that's scary.
And while you just heard him accuse RFK of being a eugenicist, this man is a bestiality enthusiast. You can see on the right that he is taking a picture with a guy in a dog mask. This is known as a pup handler. They are enthusiastic about having sex with dogs. And so I wonder if his accusation against RFK being a eugenicist is bullshit.
What the hell are you?
My point here is as gold and silver rise and as the dollar dies, yes, the prices of gold and silver go higher, but that is only the base of the pyramid. The other signs are that the evil that has infected all of our systems because of the inflation that funds everything and all of this garbage, it is unmasking itself, it is unperturbed, and it is coming out in the open as devil-worshipping evil. These are the people in charge, and they are not ashamed anymore. They are coming out to taunt us because they know they're about to lose when their funding dries up, because inflation will be impossible when the dollar is finally dead. And that is when the stackers, who have the real resources, can help rebuild society as the evil will purge itself. There is no need to fight it directly. You just have to wait for the end game, and once we have the resources, the good people can build back a lot better. And I'm using that tongue in cheek.